Hello and welcome to Morning Trade with Moneycontrol. I'm Kacholia Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly your queries during the show. So please keep commenting on our live feed. We'll have your questions addressed towards the latter part of the show. But before we kickstart, let's see what the global handover looks like. Wall Street's losing streak continues. The Dow Jones and S&P post their worst weeks since September ahead of key inflation data as fears rise over the Fed's ability to avoid a recession next year. Stocks in the Asia Pacific open lower while the SGX Nifty 2 indicates a weak start for the Indian market. European markets closed higher on Friday as investors hope for a Chinese economic recovery as COVID-19 curbs are relaxed. Economic outlook remains the key focus. On the show today, we discuss the prospects and fundamentals of plastic pipe players. The stocks in spotlight will be Aditya Vision, Apar Industries and PSP projects. All right, let's get going and discuss some stocks that could be in the news today and the trade setup for our own markets. Ruchit Jain joins us from 5paisa.com. Hi Ruchit, good morning. How bad could it be for us given the weak handover from Wall Street on Friday?
Hi, very good morning, Karuna. Well, Karuna, if you look at the recent past, then we have seen a decent run-up of 2,000 points in Nifty, where this up move started from about 16,800, 17,000 level, and it rallied up to 18,800 without any meaningful corrections. So the momentum readings were in overbought zone, and some sort of corrective action was much required after this 2,000 points rally. Now it needs to be seen whether this just continues to be a time-wise correction, where the markets would trade within the broad range of 400 to 500 points before resuming the next trended move, or we would see a price-wise correction, which would be retracement of this entire 2,000 points up move. Now, 18,450, this would be very crucial support for our markets to determine this, whether it would be a time-wise correction or price-wise correction, because in this entire uptrend, this 20 days exponential moving average has acted as a very good support, and the 20 EMA is trading somewhere around 18,450, 18,470. So I believe that in today's trading session, we already are witnessing a gap down opening based on the global cues. But the follow-up move post that gap down would be very crucial, because if we see a follow-up selling below that 18,450 mark, then I think markets could see some selling pressure going ahead. So I think rather than opening, I would keenly watch how the follow-up move is then post-opening, and in case if any sustained move below that 18,450, then I think the market would continue its short-term corrective phase.
Okay, all right. That's an interesting view, actually. Closing could be more important to watch out for rather than how we open this morning. Let's talk about some stocks that are, in the news and could react to that news flow as well. Now, there's a small cap company called Aditya Vision. Ashish Kacholia has bought close to 1 lakh shares of the company, which amounts to 1.7%. 1 lakh shares for 1465 rupees a piece. Promoter has offloaded 1.7% holding in the company at the same time. So close to 15 crores invested by Ashish Kacholia. Himalaya Finance and Investment has also bought 1 lakh shares. Talk to us, Ruchit, about Aditya Vision. On Friday, of course, we saw a sharp spike come by on the counter. But for the next couple of days, how does it look?
So I think based on news, definitely we could see some positive momentum. We even saw some 5% up move on Friday's trading session as well. And of course, with news in place, the stock could head higher towards that 1850, 1820 range in next few trading sessions. So as of now, the momentum looks positive. Looking at the price volume action, probably it should surpass that 1850, 1800 mark quite soon.
Okay. And you also have another name from the broader markets, Apar Industries. HDFC Mutual Fund has offloaded close to 1 lakh shares here. And now their shareholding has come down from 7% before to 6.8%. So close to 0.2% is what they have sold off as far as Apar is considered. Talk to us about Apar as well. How are the technicals?
So the trend is still positive, but we have seen that the stock has already seen a decent run-up in last few months. So it started this rally from about sub 600 levels, and from sub 600 it has continuously made a high top, high bottom structure, and even surpassed the 1600 mark. So I think it's already rallied quite a bit. So in case if one is looking for a short-term perspective, then I think some corrective action could be seen in the short term. And on the lower levels, the support would come around 1350, 1400 rate. So primarily one should not be in a hurry to do any kind of bottom fishing. Those who have missed the bus, I think they should rather wait for some kind of corrective actions, maybe towards 1350, where one can again take a review on the same.
Okay, all right. The third name on our list again is a small cap company, PSP Projects. They've bagged a construction order from Nila Spaces for civil construction of residential projects in Gift City, Gujarat. The order is worth 122 crore rupees. And now with this, the total order inflow year to date for FY23 amounts to 1833 crores for PSP Projects. Now, very strong rebound they've seen from, October lows. Is that upward trajectory likely to sustain?
I think here, yes, the chart structure are quite positive. We have seen a good uptrend move in the stock, and after an uptrend, if you look at last 2 months, then the prices were more in a consolidation phase. Now, this entire consolidation which has happened in last 1.5, 2 months, this just seemed to be a time-wise correction within an uptrend. And now I think we could see a resumption of the uptrend going ahead. Even Friday, we saw almost it was a breakout from that consolidation with higher volumes. So usually whenever see a breakout from a time-wise corrective phase where the volumes are good, those stocks tend to give show some good outperformance in the short term. So I think the short-term outperformance could be there. Technically, the structure looks quite positive, and the stock could head towards 720, 730 mark.
Okay, Ruchit, request you to stay on with us. I want to touch base with our next guest as well, Sanjay Manyal from ICICI Securities. Hi Sanjay, thanks for joining in. And since you track the consumer discretionary space very closely, I want to put the focus on plastic pipe segment. You guys had also released a note last week about it, wherein you had upgraded Astral from a hold to buy. You had optimistic views on Supreme Industries as well. Talk to us about the key triggers here that are playing out and the key demand drivers that are playing out in the segment. And should one buy these, not just these, but any of the piping stocks going forward, despite the rally that these stocks have seen?
Hi. So as you mentioned, we have released a report on the piping stocks last week, and that's major reason for that was the correction in the PVC prices, VAM prices, as well as the HDPE, LDPE prices. All these raw material prices are largely based on the crude based derivatives, and the correction is between somewhere between 30 to 50%. What we have seen in last 1 year, that demand has been subdued for the plastic piping. That's largely because of the high inflation in these commodities, which sort of resulted in demand destruction. Simultaneously, if you see the last few quarters, these companies witnessed a huge inventory loss, given the fact that the price corrected, so from March onwards, but most of them were holding a very high, cost inventory. So what we believe, this correction in prices would really result in a high margins for these companies from Q3 or Q4 onwards. Moreover, we believe the rather positive factor would be the agriculture and the demand revival in the real estate sector, which probably would see a higher volume traction in next few quarters and in FY24. So that's broadly the story in this segment. A high cost inventory which has been exhausted in H1. The correction at the dealer level from the inventory side has been over, and probably the dealer inventory would be filled up in next few quarters, and the strong demand in the agriculture and the real estate sector would sort of lead to the high volume growth for these companies, Supreme Industries and Astral.
Okay, all right. Well, clearly you guys are optimistic about these two companies, but how is the raw material price trajectory shaping up? How is the inventory situation like? Because those have been big concerns for the first half. So in the second half, can we see them ease meaningfully and thereby expect good margins delivery from them?
Yes, so if you see the last 6 months, the prices have started to moving downwards from March, April onwards. But obviously, most of the companies were holding the high cost inventory. And if you see the PVC prices right now, almost 50% from the highs. Even one of the other segments, not just piping, say adhesive and the paint segments for Astral, which is now contributing considerably high level for the company, has been down. VAM prices have been down for the by almost 40 to 50%. So that's also going to sort of aid the margins for these companies. As I mentioned, the plastic piping largely demand come from the agriculture and the real estate sector, and demand conditions were quite subdued the last 1 year, given the fact that the prices for these commodities and the piping industry was pretty high. So margins will reflect, if not in Q3, then certainly in Q4. Though we believe that it will start reflecting in Q3, so some bit from Q3 onwards also. But we also see a very strong demand in FY24, given the fact the government expenditure in the sector would be very high. We have a Nal Se Jal program, which would be probably accelerated just 1 year prior to the election, which is these are the long-term trigger for the sector, which will aid the volume growth as well as margin trajectory for these companies.
Okay. Sanjay, I know that not only piping space, but you track the entire consumption basket as well. So if you give us a Hawkeye's view of what's happening, talk to us about the baskets within FMCG, consumer discretionary, etc., that look the most attractive to you in terms of growth triggers as well as valuation.
So if you see, most of the FMCG companies also have seen a subdued performance from last 2 to 3 years, and that's earlier because of the COVID disruption, the supply disruption in initial first year, and then this resulted means this entire the macro conditions resulted into the high inflation across commodities, probably unprecedented level commodity inflation last 10 years across commodities, and that sort of resulted in almost 500 to 600 basis point gross margin contraction for all these FMCG companies as well. So we believe the correction started, say, with the palm oil in April, May, and now in last 1 month we have seen the crude has also sort of declining, which will be certainly a sigh of relief for FMCG companies. We specifically on a longer term perspective like foods companies because of their underpenetrated levels, somewhere between 20 to 30% is the penetration level for the packaged food companies, and certainly though in next 2-3 quarters we will see the companies with a high crude base packaging cost concentration would be benefited. But on a longer term perspective, foods companies have certainly large potential, and we continue to like Tata Consumer, we continue to like ITC's FMCG business, and I think these companies will benefit out of it.
All right, great then, Sanjay, for joining in and for sharing your analysis of not just piping companies but the overall consumption space as well with our viewers. All right, back once again to talking technicals. Ruchit is here. Ruchit, any of the consumption names that you guys like? I mean, it could be piping, it could be electronics, it could be FMCG. Anything that stands out for you technically?
So I think yes, the FMCG space have been showing some relative outperformance, and I think in the times where again global markets have started showing some volatility, I think some amount of interest would again turn towards this towards the defensive space. So HUL within the FMCG space has seen a good breakout of late. Last couple of weeks we have seen a resumption of that high top high bottom structure. The volumes on the price up moves are also good. So I think some sort of leadership indications are there from the HUL. So this could continue towards the 28.20, 28.30 mark. So we are positive on HUL. And I think as a defensive space, FMCG would relatively show some outperformance in next few trading sessions.
Okay, since you're talking about FMCG, I want to also understand how is Colpal looking on the chart. One of the viewers has sent a comment and he would like your view on Colgate Palmolive.
So we witnessed a good price up move on Friday, where the previous swing highs were taken out, and also the volumes were relatively good. So as I just said, the FMCG basket, if it shows some relative outperformance, then I think stocks such as Colpal should also show an up move in the near term. So as of now, it seems that 1720, 1710 is the next resistance with the stock to see. But in case if this up move continues with higher volumes, then I think the stock could extend its up move further on the high side towards 1750 as well. So I would like to advise him to continue to hold on to the long positions, but when it comes around at 1710, 1720, just look at the volumes and make your decision whether you should book over there or continue to hold it.
Okay, all right. Let's also address some more viewer questions and queries. Kalpana is writing to us about L&T Finance Holdings. What's your view here? This one, again, a good rebound seen last few weeks, but again, it's starting to plateau or maybe show some signs of reversal. Could that happen, or do you think it will sustain the momentum?
So, Karuna, I think for L&T Finance Holdings, one should take a bit mid to long-term view rather than trading it for short-term. The stock has recently shown an up move from 78 rupees to 96 rupees. There has been a breakout with good volumes, but in near term we could see again some consolidation. But if I look at some weekly or the monthly charts, then the price up moves are getting good volume support, whereas on the declines the volumes are quite lower compared to its average. And also we have recently seen an impulsive up move during February, March, where the promoters also hiked their stake in this company. So I think from a long-term perspective, if you hold on, when I say long-term, I mean more than a year, year and a half around if you take the view, and 120, 130 range could be seen in the stock. So take some positional view at least for a year and continue to hold on the stock. Maybe around 130 that is the target that we should hope for.
Okay. The next query then that's coming in is from Rahul. He wants your view on LIC. He bought at 889 rupees. Should he sell or continue to hold? What do you think? I mean, LIC, we have very limited, historic structure. But can you give us any thoughts on that?
So I can just give you the support level where you can place your stop loss. As Karuna just said that the chartical history is very limited, so it's very difficult to make any technical analysis or some midterm projections based on the charts. So on the lower side, 620 is now a good support for the stock. So if you have bought it only for trading, then do maintain stop losses for any stock that you buy for trading. But if you are looking at it from a long-term perspective, then I think you should take one fundamental check on the same.
Okay. How about JK Cement? Kishore wants your advice on this one.
Yes, I think cement as a space have shown quite good signs recently. The price of move in certain stocks such as JK Cement, JK Lakshmi Cement, then even Ultratech Cement within the large cap space. We have seen good volumes coming in the price of move. So I think somewhere the price-wise corrective phases are done in this. In near term, just because we have seen a good rally, so some short-term consolidations could be seen. But from a mid-term perspective, I think the trends remains positive for most of the mid-large cap cement names. So continue to hold on the stock. 2800 to 2850 is a good support, and in case if you get any decline towards that range, I think it would be a good idea to keep a buy and dip approach and add more quantity over there. And the existing portion should be held up for somewhere targets around 3400.
All right. Okay. Moving on to the next question from Funny, and he wants your advice on GE Shipping and SCI, both companies from the shipping space. How are they looking?
The trend is positive for both. GE Shipping but has shown a very fast move compared to SCI. But even SCI is holding on above its crucial 20 and 40 days exponential moving average. So if you already have positions, then you can continue to hold on. GE Shipping should be held with a revised stop loss of 635 now. Whereas even SCI, I think there could be some slow and gradual up move in the SCI. The moment it's not a very high beta counter like GE Shipping where you see fast up moves or fast down moves. But the broader trend remains positive, and 120 is a good support for the stock.
Okay, got it. How's IDPI looking? I mean, there's been a lot of, chatter about the bank's divestment plans. There are a lot of new updates. The stock price, of course, keeps reacting to all the news flow possibly that keeps coming in. So how does IDBI look to you from the next maybe near to medium term perhaps?
So Cornet, this rally started from 30 rupees, no, I think 2.5 months back. From 30, it has already doubled to 16, just a span of 2.5 to 3 months. So certainly the risk reward issue now to get in the stock is not much favorable. So I think one should not chase the up move. No, rather I think the near-term volatility, of course, could be there. Considering that the stock prices have already rallied, it is reacting on the news on both the sides of the trade. So I think the risk is much high in this in the stock and for entering at current levels. In case if you get any dip towards that 48 or 46 range in the short term, so I think some contra trades if has to be taken, then ideally those would be good levels where the stop losses would be small and the risk would be much smaller than what we are looking at right now. So wait for some declines around that 48 to 46 range. In near future, if we get that range, then I think one can look to do some kind of bottom fishing with this.
Okay, all right. Mandar is asking us for your view on Max Healthcare for the long term. What do you think?
So yeah, I think continue to hold on the stock. We have seen a good price volume action where when the price corrections were there, they were on low volumes. And whenever we have seen the price up moves, the volumes are good. This indicates a good buying interest by stronger hands in the names. A gradual up move could be seen over a longer period of time. I think if I look at some reciprocal retracements, that 560, 570, 70 are the target projections which can be seen over next few months. So hold on to the stocks for, from a mid to long term perspective.
Okay. Another name from the broader markets is Newgen Software, which has also seen a good spike in the last couple of weeks. We're getting a lot of questions here as well. So tell us about the prospects from these levels for Newgen.
So off late we have seen a price up move in the stock, but if you look at recently, then the stock main support base was around 335, 330. So if we get again a dip towards that support level of 335, 340, maybe ideally that could be good levels where the stop loss could be placed below 320 and one can take some long positions. So some short-term up move was there. The corrections are equally sharp after the last 1 week. So ideally, if we get dip around 335, then one can look to buy at those levels with stop loss below 320. Existing positions, if there are, then they can be held on with the same stop loss.
Oh, okay. All right. Gland Pharma, again, it saw a very good spike last few weeks, close to 1880 levels. But again, it has retreated a fair bit. Does this provide an entry point into the stock, or could that fall sort of spiral into something worse?
So if we compare this stock compared to with other pharmaceutical names as well, when the pharma space had seen an up move, the stock had shown an underperformance at that time too. So in the near term, until we see a price up move or a high top, high bottom structure getting formed, I think the short term underperformance could continue in the stock. So one should avoid taking any bottom fishing over here. Let the structure get changed. Let me witness some buying interest from any levels or a high top, high bottom structure. Ideally, then one should look to enter the stock. But if we look at within the pharma space, I think the other large cap names such as Sun Pharma or Glenmark Pharma, those are much better placed than compared to Glen Pharma. So even in medium term, if one wants to buy on, then Sun Pharma should be preferred over Glen Pharma.
Okay, all right. Dinesh is asking us for your advice on Voltas. Again, a very sluggish mover if we look at the last 2-3 months moves on the counter. Do you think it's a good idea to buy something like a Voltas right now?
Not really. In this kind of market where after that 2000 points rally, if some stock has not performed, so I think ideally one should not look to do any kind of bottom fishing in such underperforming names. So we have seen that short-term trend still remains negative. Some pullback move has been there in last 15-20 days from where we witnessed 800, 810 were the lows. But again, if you see the pullback moves, there are no higher volumes in this pullback move. So I think one should avoid any kind of bottom fishing. It looks quite attractive because the stock has not performed in this rally, in spite of being one of the outperformer over last few years. But that's what when the trend changes, the underperformance could continue as well in the next few months. So I'm not expecting any kind of significant price rally in the short to medium term. So ideally, one should avoid from a trading perspective.
Okay, all right. Richard, what about your own preferred picks in the market right now? Which stock would you like to recommend to our viewers?
So as of now, I would stick to some large cap names, and within the large cap banking space, since the Bank Nifty has been showing a good outperformance and spare. So within the banking space, Axis Bank is one stock where the chart structure is quite attractive. Last week, we witnessed a breakout above its previous swing highs. The volumes were good on the breakout. And even if you compare Axis Bank with other private sector banks recently, then I think a clear outperformance is there in the stock. So the downside seems to be very limited here. In case the banking continues to outperform or banking shows more up move from current levels, then I think Axis Bank should stand out from this entire basket. So one can go long on Axis Bank at current levels with stop loss below 908 and expect targets. First target would be 969 and second target would be 985. So Axis Bank would be my preferred pick, which could be bought.
Okay, great. Thank you so much, Ruchit, on that note for joining in this morning and talking to us about a host of stocks and sharing your thoughts on our viewers' queries and concerns as well. With that, we're going to wrap it up right here on Morning Trade. Thank you for tuning in.